Good morning and welcome to Market Day Report. I'm Chris Swift. We've had quite a bit of activity from yesterday with the WASDE report, and overnight we've seen some issues in the crude oil market. I want to point that out this morning. First thing that we look at before we get to our guest and the other quotes, we're up $3.34 in a spot crude, 86.25. December up 3.20 at 85 even. The reason I'm mentioning this is when we get to our guest, I want to try to relate this to what we might be seeing in our grain markets. Overnight grain markets were a little bit firmer on the December corn up 2 1/4, 4.98 1/4. March up 1 3/4 at 5.13 1/4, with the rest of the months up 1.5 to 1. Our soybean market had been firmer from yesterday, and it really caught a bid yesterday after the WASDE report. November up 6.5 at 12.96 1/2. And note that all other contract months are back above that $13 handle. January 13.16 1/4 up 7.5, all the way out to July at 13.45 3/4 up 7.5. The wheat market, Chicago, been a little firmer this morning and still is, up 9.5 December, 5.81. March up 8 3/4 at 6.10 1/4. Kansas City hard red winter wheat up 10 3/4 December, 6.85 3/4. March up 11 at 6.95. And we'll wrap it up with Minneapolis spring wheat this morning, up 9.5 December at 7.33 even. And the March contract up a dime at 7.57 1/4. I got Brian Hoops with me with Midwest Marketing. And Brian, I showed that crude oil chart at first because what I'd like to ask you is, we know we had been talking all week long about a slack of demand for our corn markets. Now we see energy coming back up very strong again. Could this be somewhat of the boost or the underlying factor that's going to keep that corn from maybe dropping 15, 20 cents instead of either stabilizing or maybe grinding higher? Okay, I'll tell you what, we lost him, so I'll tell you the answer to that. I think that we probably will. We have noted for quite a while that the undertone in the grain market is supported by the energy markets. Last week we saw some declines in the energy market. Now they're starting to move back up again, as we saw this morning. I think that puts a really sharp undertone on our, especially soybean oil market and the corn market for our biofuels. So when we look at the markets this morning, a little bit firmer. We already saw a WASDE report yesterday show a slightly lower grain yield, a little bit lower, as much as a half a bushel on the soybeans, or 49.6 on the beans. And that didn't drop the carry out too awful much, but the crop is relatively small to begin with in the bean market, simply due to the 2 million acres less that we grew this year. The corn market with the 4 million acres there. And so with that, I'm going to ask Brian to step back in real quick here, and I'm going to ask that question again. Brian, we know we've seen a little bit in the energy market, some support from the crude oil. Now we're seeing crude oil perk back up again. Can this increase the support for our grain markets?
Yeah, I certainly think it'll help, us out, Chris, as we go forward in here. So we're starting to see a little bit of pickup in demand. It sure feels like our harvest lows have been scored in corn and in soybeans. I don't know that corn can really take off and rally, even if crude oil continues to push higher over this political unrest in the Middle East. We still have a big supply, large carryouts of corn. So our upside is likely muted there. But the soybean market, I think, because of the tight balance sheets we're looking at yesterday, even with the 6th largest soybean production in history, we're still looking at one of the tightest balance sheets we've had going back to 2015. So that's a market that really could be explosive, I think, through this rest of this fall and the winter months, especially when you factor in South American weather. There's parts of Brazil that are starting to become dry, and that's a concern for the market here. So I think we're going to have to probably start adding some premium. But we saw export sales out this morning. We saw additional private export sale announcements this morning. So all this is positive for the grain markets this morning. And if you look at those export numbers, China really shows up as a huge buyer. They showed up as a buyer of U.S. soft red wheat, corn this week, and of course a major buyer of soybeans. So having them in our markets, buying our U.S. products, is really key for our exports, as that's really one of the price determinants that we're looking forward to through this winter and into the spring time frame.
Yeah, and I've always been impressed with the Chinese buying. I learned years and years ago of how savvy of traders that they are. And we just happened to note that look where they bought beans yesterday, pretty much on the lows. So it's pretty interesting to see something like that. In the wheat market now, we know we've seen still some dry. Do you see anything that the WASDE report might give us a clue as to maybe either swapping directions in the wheat or continuing in this little bear market we're in?
Yeah, unfortunately, that report yesterday really didn't give us direction for the wheat market. Most of that came in the small grains report at the end of September, where we saw bigger production numbers for the wheat. So that's going to be kind of burdensome. Wheat's going to be, I think, mostly just a follower here of what soybeans and to a lesser extent corn does. If we can get the funds momentum shifted to the buy side where they're covering positions of corn, covering short positions of the wheat. There's some upside to be had in this wheat, all for short covering. Really, the fundamentals that really don't suggest a continuation of higher prices. Maybe we get into the winter months, into the spring, and start talking about winter kill or concerns about that winter wheat crop that's been seeded. Then we can have maybe some supply issues. But right now, that winter wheat is off to a really decent start from basically Montana all the way down into Texas.
All right, good deal. Well, Brian, I tell you what, stay with us. We're going to go away and take a short commercial break. We'll be right back. We're talking with Brian Hoops with Midwest Marketing. Stay with us. Good morning. Welcome back to Market Day Report. We closed the livestock markets a little firm yesterday, and I'm anxious to see how they'll open this morning. But let's see where they started or closed yesterday and where they'll start from this morning. The October contract up 90 at 185.40. December up 82 at 187.80, and the Feb up 75 at 192 even. In the feeder cattle market, trading a little bit higher at 252.02, up 185. November up 157 at 253.57. Jan up 117 at 254.37, and yesterday's feeder cattle index reading was at 250.30. Lean hog market yesterday's close. December up 12, 70.10. Feb up 35 at 75.02, and the April hogs up 52 at 81.52. I'd like to invite my guest back in, Brian Hoops. He is with Midwest Solutions. And I'll tell you what, Brian, we saw some activity in the cattle market yesterday. Can you tell us what we saw?
Yeah, actually in the futures market, we saw a little bit lower opening give way to some more buying and short covering, and that led us to higher prices by the closing bell. So nice technical action in the cattle and the feeder cattle markets. Cash trade coming in a surprise, I thought, with $1 to $2 gains across the Southern Plains areas. Packers much shorter bought than anticipated, and that was kind of a surprise, kind of a bullish surprise, which we love to see. Now, this morning we had the export sales out, and I mentioned about the grains, how China was a key buyer of U.S. products. Well, they were completely absent from beef and from pork, didn't even show up as buyers, and saw a very poor export sales number for both beef and pork. I thought those numbers were pretty dismal. So it could put us on the defensive this morning in the cattle. I think we've dialed in that stronger cash trade already. If we're looking for some new direction, it's down to the downside on the early stages this morning.
The exports have been pretty weak for most of the year, and I know a lot of that hinges on just the price alone, specifically in the beef market where it is so high, and the United States being the only one that raises the grain-fed beef. So I can kind of see that, and of course our dollar has been very, very strong as well, so that hasn't helped the situation too awful much. Let's go to the corn market, and so we talked about it earlier. Looks like we're going to store quite a bit of it. The price maybe not go up, but with the new information, it might not go down much. What's our cattle feeder or hog producers going to do now that we kind of got a better idea of what the next 6 to 8 months where the supply is going to be?
Yeah, we know kind of what our supply is. It's a big crop. It's a 15 billion bushel crop, one of the largest in history, but not as big as what maybe was feared a month or 2 months ago. So it's time for those cattle hog producers, if they haven't locked in feed needs, to certainly get those locked in. This is, we're seeing a widening of basis in the interior areas around that Mississippi River because we can't ship a lot of product because of low river levels. So there might be some opportunities to get some product locked in that area. We're hearing basis levels in more of the Western Belt where there's more ethanol plants being a little tight on supplies because of slow farmer selling. They're going to store all this crop. So basis is already starting to narrow up in a lot of those Western Corn Belt areas. And that's where, producers really have to be cautious in here. You can buy some futures and options to protect yourself against higher futures markets. but you have to buy that cash product if you're going to lock in, your actual cash feed needs and lock in that basis that is historically as wide as it's going to be during the first couple of weeks of October.
And that's really good advice, because we know the basis is going to swap tremendously if it begins to rain, and it'll change literally overnight on the Mississippi there once we begin to get some ability to shove that grain down south a little bit. Brian, I certainly do appreciate you taking the time to be with us this morning. As Brian Hoops, and he is with Midwest Marketing Solutions.
Okay.
All right. Well, we're off and running.
Off and running.
I can't wait till the opening bell, see what's going to happen.
Everybody digested those numbers overnight.
They did, and I took some time to look at them and everything, and it looks like we've got a really big crop, and it's just a little bit smaller than what we thought.
Sixth largest soybean crop in history.
Yeah.
I mean, that's something else. When you consider the drought conditions that we had, it speaks volumes.
Oh, it really does. But look at our usage. So we got 220 million bushel carry out there, and last year was a bigger crop than this year.
Yep.
So if we get down under 200 at the end of the year, it'll be quite interesting.
So proud of our farmers. So grateful for what you do
Never
every day.
bet against them.
Thank you so much, Chris.
Absolutely.